Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But before that, let's have a look at what the markets are up to. So Cheryl, the benchmark indices are showing a bit of a weakness, but a lot of stock-specific action.
Absolutely, Shrishti. Subdued trading session coming from the benchmark indices. Very good morning to you, and that's the way how it's transpiring at this point in time. Look at Nifty is trying to hold on, or rather it is not. It slipped below that 20,900 mark, as we can see it on the screen right now, actually hovering around that 20,830 or rather 50 mark as of now. If you talk about the Nifty Bank, is moving exactly in tandem with the benchmark indices, actually testing the 47,000 mark when it comes to Nifty Bank. Advanced decline ratio neck to neck at this point in time. 1:1 is the advanced decline ratio. While talking about the list of gainers, it is NTPC, Hero Motocorp, Power Grid as well as Eicher Motors. Add to the list BPCL, all of them seeing green on the screen. While on the flip side is the IT index that's under pressure in trade today. So you have Infosys, TCS among the top losers on the Nifty, followed by Bajaj Finserv, HDFC Life as well as LTI Mindtree. So yes, looking like the way how the Nifty losers are panning out. Suffice to say that the IT index is among the top loser in today's trading session. So 1.7% downtick coming for the IT index, followed by Realty index also seeing some sort of subduedness. Apart from that, you have the PSU counters that are seeing good gains in trade today. The PSC, Nifty PSC counter is the top sectoral gainer, followed by Pharma index, and the broader markets are outperforming the benchmark indices. So that's the way how the markets are looking like at this point in time. But there's one thing to note is the fact that in the list of gainers and the losers, Shrishti, it's been a while that we've actually spoken about the FMCG index, because today also is trading flat with a positive bias.
Well, yes, but a couple of points that are emerging in the FMCG space is that the companies are coming up with their commentary with respect to the urban and the rural demand, because rural demand has been languishing behind. But what are the latest updates on that front? So let's try to decode that. And with this, let's welcome Winnie Motiwala live in our studios. Winnie, what's the latest commentary on the FMCG pack? And we also had the ITC analyst meet. So what are the takeaways?
Absolutely. So, we have, firstly, good morning to both of you all as well. And a lot of commentary that came in from two major companies, HUL as well as ITC analyst day meet. So, key highlight that came in on that front was that they spoke about how urban is still doing better than the rural. Rural surely is seeing some green shoots coming in, but is not as good in terms of the recovery. It will be a slower recovery. So, Q3 maybe still some subduedness could continue in the rural areas, and obviously that does impact the volumes of the company. And similar commentary came in a while back from HUL as well, indicating that rural was still a bit under pressure and still under stress as well. Other than that, the trends in terms of premiumization, ITC too highlighted that premiumization is doing well. HUL had spoken about this before as well, that premiumization trend is doing much better than the mass segment. So that trend still continues as well. Other key highlights from ITC's yesterday analyst day meet was in terms of M&A opportunities. They will be looking that based on opportunities in the FMCG segment. So if there is an opportunity, they may look at something like that over there as well. And management is saying that they want to target something like an 80 to 100 basis point YOY margin expansion is something they could expect steady from here on as well in terms of an expansion on that front as well. Focus is obviously going to be on premium segment and premiumization in the personal care segment, while value-added products in the paperboard segment is what they're looking at as well. HUL in terms of commentary, like I mentioned, urban-rural growth, that's a similar trend to ITC, what they were mentioning, premiumization, as well as margins. They are also expecting an expansion in margins even sequentially as well. So the trends are quite similar that we saw in Q2, could be expected in Q3 as well. Volumes could remain subdued is what HUL is highlighting. And an FMCG major highlighting volumes remaining subdued is a factor to watch out for other FMCG companies as well. As of now, when you look at it on the 5-day basis, FMCG, Nifty FMCG seems like a bit of an underperformance there. But, key to watch out for is how they actually perform. Q3 maybe could be subdued in terms of volume. So that's the key highlight as well.
All right, thank you so much for that, Winnie, for putting into context what's happening in the FMCG space. We also now have the management of PI Industries joining us, and along with the management of PI Industries, I have my colleague Soumit Sarkar also joining us. And Soumit, PI Industries is a counter that has been in focus of late, and we have the management joining us right now.
Well, thank you, Sharif, for that. But if you see, for PI Industries, the main reason why the stock was down was largely on the back of the news flow which came in related to Chinese capacity coming in. And we have Rajnish Sarna joining us, the joint MD of PI Industries, to give us more details on that. So, firstly, sir, if you see this Chinese capacity news that is coming, how do you think that is going to change anything for PI Industries going forward?
This kind of a news is nothing new. Any product will generate and generic companies will announce and then finally build capacities. And these are only announcements right now. But let me try and give you a perspective, from overall perspective on this product and our position on this. Okay. As far as this subject molecule is concerned, I would say in its growth journey, it is still at a early stage. There is a significant headroom for growth of this molecule across geographies, across crop and wheat segments. Okay, because of the challenges these existing 30, 40, 50-year-old products are facing, and also environment challenges these products are facing. So that is point number one. And this generic announcements and activities is also signifying the same potential. Today, this molecule is maybe 600-700 million, but the kind of opportunity size which is there for this molecule along with other mixtures is multi-billion dollars, significantly larger size. That is point number one. Point number two, from the innovators' point of view and as the supply partners of innovators' point of view, which is PI in this case, there is nothing significant impact or no immediate or midterm threat that is there, which is being perceived by many of these analysts on basis on these news items. And why I say so, because most developed markets where the more than 90%, 92%, 3% market is there, for example, US, Brazil, Japan, and few other countries, there the patent protection, data protection is there, which will not allow these generic companies to enter for next several years. In few countries, this is there till 2025. In few other countries, it is there till 2028 or 30. And thereafter also, there are many combination molecule. Combination is a mixture product of pyroxasulfone with other products, where the protection is even longer. And then there are process patents and so on and so forth. So the second point is that there is no threat to the existing volume size and also the potential for growth even for the innovator and the current strategic supplier. Okay, that is point number two. And point number three that I would want to highlight is that PI Industries is not a one molecule company. Okay. Yes, this is one of important products in our portfolio. But if you look at our exports, if you look at our domestic product portfolio, there are more than 25 products we are exporting. There are more than 35, 40 products that we are selling in the domestic market. And in addition, we are every year adding 4 to 5 products. This is such a diversified portfolio that even small blips in some of these products or individual products are not going to impact the growth story of PI. And we remain very confident of the growth outlook that we have indicated for the current year and also for next several years. I'll stop here if you have any further questions.
Pyroxasulfone. This is one of the products on which you're heavily dependent for export revenues. And there's another news flow that is there on the guidance cut by one of your major clients, that is Kumai. So how will that impact PI Industries?
Yeah. So that, obviously I cannot comment on behalf of the other company's guidance, but my understanding is that, we are seeing the industry headwinds for last several quarters. Okay. And many of these large global companies have also got impacted because of inventory and working capital situation on their generic portfolio. Okay. And because of that, situation, they are trying to kind of balance some of their working capital exposure overall. And in that process, maybe for a quarter or two, there may be some supply adjustments which are happening on some of these patented and proprietary molecules as well. So this is more that kind of temporary adjustment is what I read. As far as product consumption on the ground, product demand, growing demand on the ground in different countries, geographies is concerned, I have no doubt, and also I have enough information to suggest that it is only growing. So there is no decline or reduction in demand. And mind you, the genericization so far in this molecule is minuscule. It is less than 6, 7, 8%. So it is nothing that is going to dramatically impact in the midterm for this molecule for the innovator. As far as our visibility, our understanding, contractual understanding on supplies and volumes is concerned, we have a very clear visibility for next several years, and we see no change there.
One thing that I wanted to understand, is it the first time that one of your major clients has actually cut a guidance, and was there or has there been any conversation with your clients regarding this inventor situation that they are facing, because of which there could be lower demand coming in for your products going forward?
Yeah, so we always very regularly remain in touch with our customers. And by the way, this situation or this particular, as I was telling you earlier, this new item that after certain years, obviously product will go generate. Many companies would want to get into that molecule. So this is a very known fact. And obviously we also discuss with our customers. The customers also have their own strategies and, to handle that situation. And that is what I was telling you earlier, that the kind of data protection, market protection, process patents, etc., that they have, they are very confident of, steadily growing this business. No question of decline in the business, but the question is of only growing, because the current market size of the molecule is very small. In the growth life cycle, this molecule is still at early stage.
So just to understand this, now we do understand that there is the products that you sell are patented, but given the fact that there is an additional capacity coming in the global market, do you expect the pricing would come under pressure, and thereby this could also impact your margins?
Yeah, so, generally, and which happens in any genericization, that in some of the markets where genericization happens, obviously some pricing impact comes, but that is more towards the marketing margin aspect of the lead player in those markets, okay? But at the same time, the development spend also gets optimized. So at the market leader's place, whether it dramatically impacts margins, I'm not too sure, because while on one side optimization or reduction of price happens, but at the same time volumes go up because the overall market goes up, and also some of this development spend also gets rationalized. So I do not see a significant change if it happens in terms of margins for the innovators in these products.
Yesterday, when we spoke on the phone, you did mention that you are reiterating your guidance of around 18 to 20% revenue growth for FY24. Do you expect a similar growth trend to even continue for the next financial year, that is FY25?
Yes, while the specifics will obviously be mentioned, announced at an appropriate time, which happens after our board meeting of quarter 3 and 4. But yes, the general guideline, that indication that we have always been giving is that we have clear visibility of sustaining this growth momentum. And this comes from our diversified portfolio, both in export and in domestic business, and the other strategic initiatives that we are taking.
The inventory situation that you were mentioning about on your client's end, when do you expect that to resolve?
Well, this inventory situation, by the way, is not at our client's end. And by the way, this is not impacting our supply schedules or ABC. What I was referring to was the inventory situation and balancing of working capital at our customers' clientele level, not at our customer. Our customer is the innovator, which is Kumia in this case, okay? But ultimately, they also have a strategic partner across the globe, and some of these global innovator companies and global marketing companies, they are trying to balance to get over this, headwinds. They are trying to balance their inventory situation and working capital situation, and because of that, there may be these transitory adjustments which are taking place.
Final question, because this is what the market was also market veterans were also speaking about. Even in past, we have seen that Chinese have come out with such announcements of large capacity addition related to one chemical, but then going forward, they have withdrawn this capacity addition decisions also. So how do you see that, and do you even expect Chinese to successfully add that kind of capacity going forward?
Not fair for me to comment on some company's announcement, but basis past experience, I only can suggest that, many a time we have heard these stories of capacity building. In few cases, it is worthwhile to mention that in few cases, if you sum up those capacities are 2 to 3 times of the market size itself, okay, the existing market size itself. So, and then what happens that particularly in case of China, I mean, many of these companies who are connected with one manufacturer, and all these companies will announce those capacities, and then, it appears in the market that these are these, 1,000 ton capacities also replicated 6 times, 5 times, 7 times, and that becomes 7,000 tons. So that's how these things pan out. But suffice to say that ultimately, these are all announcements. The existing major markets are protected for several years, and we will, over a period of time, we will see that how many of these announcements really fructify on the ground. But ultimately, at some point in time, maybe 5 years down, 7 years down the line, there are certainly going to be other manufacturers, generic manufacturers. But by that time, the market size for this particular molecule itself will be much, much larger.
Thank you for joining and giving us all those details about the product and how this will not be actually impacting PI Industries going forward. Thank you for your time, sir.
Thank you. Thank you so much.
All right, so that was the management of PI Industries allaying all of investor concerns, isn't it?
Well, yes, he addressed pretty much everything on pricing, demand front, given the fact that he's saying his products are patented. His demand growth guidance, not only for FY24, but FY25 also won't be impacted. He's pretty confident on that. And also given he's also confident on the pricing front. He's saying that pricing won't be impacted.
All right, and also he's mentioning the fact that PI Industries is not just one molecule company, they're exporting over 25
Well, it's definitely not a one molecule company.
Exactly.
We knew that, but this molecule is very important
Very
for them.
important.
And
He
we can
did
say
mention the
that
fact.
we can see that from the share price movement as well.
Absolutely, but if you look at the PI Industries share price right now, it's on the day's lowest point. In fact, looking at the
But we have to see 2 days move. It was down 10%
Yeah, it
yesterday.
was down 10% yesterday.
It's still down around 12%.
All right, so that's PI Industries for you. Hopefully, this clarification coming in from the management should allay some of the investor concerns. Nevertheless, like Somit said, the stock was down 10% yesterday, now actually lower by about 1.5%. Key to note, off the day's lowest point. Time for a break on this edition of Buy Now, Sell Now. We'll come back, we'll start taking your queries, talk about FMCG. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. So let's get started with taking all of your stock-related queries that's already pouring in. And today we have Kunal Bothra as well as Avinash Gorakhshekar joining us to help guide you better when it comes to your investments. The first one, Avinash, is coming towards you, and this one is from Abhishek Kumar, and he wants to know about IREDA, that's IREDA, which is a recently listed counter, seen spectacular returns in the last few days itself of his listing. No doubt, FOMO has kicked in. Everyone who've not actually participated in this spectacular rally that this particular counter has witnessed. Do you think now is the time to go ahead and invest in Ireda, or should someone wait for some sort of a correction to come in and then invest? But by then, will it be too late?
No, I think, Cheryl, first of all, good morning. My sense is that, this stock was issued in the IPO at 32 rupees. It's already multiplied 3 times. So I think definitely now, it's become a little pricey and expensive. So I would not be in a hurry to buy the stock now. Although, the managing director recently commented that they would soon become a Navratna enterprise. So that is definitely good news. And within the green energy and the renewable pack, IRDA has got a special kind of positioning. So there's no doubt that the next 2 to 3 years are going to be very strong and encouraging. But I think whenever investors buy the stocks at the peak and typically on circuit, I think it definitely boils down to the fact that the margin of safety is completely lacking. So I would believe that although the circuit now is 10%, earlier it was 20%, I would still believe that it's better to wait for a mild correction and probably enter the stock at lower levels rather than entering the stock at these levels. Although I do believe that the next 2 to 3 years for the company could be encouraging. So I think investors who have already stock can hold on, but fresh buying should be avoided.
Coming to you, Avinash. First of all, very good morning to you. This query is from V. Murli and he wants a fundamental take on Venky's India. He's already holding 200 shares from a price of 1960 rupees. He says that the management sounded confident about the improvement in the margins. So what's your take? Do you also believe that there could be some margin improvement and should he continue to hold on?
Yeah, I think, within the poultry space, Venky's is a market leader, and I think they have consciously, even branded their products. So I think keeping a slightly medium to long-term view, I think definitely the investor can hold. My sense is that, post-COVID, things have improved dramatically, and I think their B2C business is also picking up pretty well. So I think over the next 12 to 15 months, if the investor can hold on, definitely I think you could expect better numbers from the company. They have a large domestic market exposure and the market has been growing by almost 15-20% every year. So, for a market leader like Venky's, it's obvious that they should also grow with the market and probably do better than the market growth. So hold on for the next 12 to 15 months. Definitely a decent risk reward can be expected.
Next query is actually coming in from Vishal. He's writing to us from Dubai, and though he's a long-term investor, the category that he wants advice on is the Adani group of counters. So Kunal, let me take this to you because he's saying that how should one look at investing at a more volatile Adani group counters like Adani Energy, Total Gas and Adani Green in particular. He wants to hold on to them for the longer term. He's okay to hold on to them for the longer term, but he wants to know whether he should keep adding these counters on dips for a better prospect. Do you think it makes sense, or do you think avoid these counters in the Adani group of counters and look at more formidable players like Adani Ports or Enterprises for the matter of fact?
See, first of all, I think it's an interesting question. There are two parts to the question. I would probably resolve it into one. Of course, is how do you try and look at buying on dips? So the portion of or the quantum of buying which you can do for the stock should be a part of your overall portfolio. So remember, such kind of volatile stock should ideally not be more than individual stocks. I'm saying should not be more than 1% to 2% of your entire construct of your portfolio, because the high beta nature could probably provide more swings. So in case, for example, if you have a 10% say a proportion for the Adani group of stocks as part of your overall portfolio, and I'm not talking the prominent names like Ports and Enterprise, but the more high beta ones, then the volatility itself could probably lead to a swing of 3%, 4% swing for the entire portfolio in odd or erratic kind of times. The other part of the question is, or rather, my answer would be that to try and have or to compensate for volatility, position sizing is most important over here. So if you are already holding a sizable size for your the names which you mentioned, Adani Green, transmission gas, etc., and if they are a smaller size as compared to your overall portfolio, I would suggest to stick to the same size and not add further for these names. If you're looking to add from the Adani pack, I would recommend Adani Ports and probably some parts for Adani Power as well.
Okay, moving on, and Avinash, the next query is on TN Petro. Peter wants to know, is this a good stock to have in the portfolio for the next 3 years?
Yeah, I think this is a commodity stock which manufactures lab, which is largely used in soda ash and basically in the detergent sector. My sense is that 3 years is a very long period for a commodity stock. Although the price is attractive, my sense is that if the investor has a 12 to 15 month horizon, then definitely one can look at it. Lab prices have been moving up steadily, and I think looking at the kind of growth in the detergent as well as the soda ash sector, I think in terms of the domestic market positioning, the company is quite well placed. This is a SPIC group company and has been doing pretty well over the last, say, 2 to 3 years. So I think from a 12 to 15 month horizon, one can take a call. Thereafter, one has to review because it's a pure commodity and any sharp drop in the commodity price could obviously impact their margins. So at best, I think 12 to 15 months is a good time frame where the investor can look at investing.
Kunal, interesting query. Rajesh Gupta from Delhi has written to us. He wants to invest 5 lakh rupees. He basically has this funds available this after exiting from HUL. So now he wants to know which stock or sector should he look to invest this money in.
So I'll give few names which looks attractive. NMDC is something which looks attractive at current levels. This is a stock which I've been bullish on here, and my sense is that the stock should at least scale past the 200 levels. PNB from the PSU banking stock looks attractive at current zone. In fact, you can probably look to add even Canara Bank. Both of them are formidable names from the current juncture. You might look out for a larger cap name that could be in the sense with HDFC Bank at current levels of 1625 or 1630 where it's trading right now. And in case of Reliance dips back towards 2300, 350 odd marks, so another maybe 50-60 points correction for the stock price, that could be a point where you may look to add further.
Okay, Avinash, the next query is from CG and he's holding shares of Kirloskar Ferrous Industries. He has bought the shares at a price of 496 rupees. He's sitting at a mild profits. Good to book out profits, or can he continue to hold on this stock?
I think Kirloskar Ferrous, Shashti, he can hold on. Although the stock has underperformed in the recent times, what is interesting is they have taken over, the assets of ISMT, which was basically into based seamless tubes, and which obviously would lead to a lot of value addition in the market for them. They are already a leading producer of castings for the for the tractor as well as for the heavy earth moving segment. This product addition would actually help them get into a lot of automobile passenger car companies, typically for the bearing requirement. So I think over the next, say, 12 to 18 months, once the merger gets completely digested, we could see better numbers once the consolidation impact happens. So I think one should be better holding on here. Good growth prospects could be expected over the next, say, 12 to 18 months.
All right, this one is coming from Dikshita, and this one is for you, Kunal. She wants to know if she can look to buy Infosys currently at these levels. Do you think it makes sense given the fact we're seeing some subdued moves in the IT pack?
So yeah, the stock has corrected 50-60 rupees from the 2-day, 3-day high. It's a good time where you may look to start buying, but then keep some powder dry in case if it corrects towards 14-12, 14-15 mark on the spot levels, look to add further.
Okay, so that's the take on Infosys. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And today onto the show, we have Kunal as well as Avinash with us to guide you better. And Avinash, coming to you for the next query. This one is from Mayank Saraf, and he wants a view on Pilani Investments. He's holding 200 shares from a price of 2,500, I believe, and he says, how is this stock looking to you, and can he add more with a 3 to 4 years investment horizon?
I think Pilani Investment is the Birla holding company for all the stocks the promoters hold. It's a very illiquid stock, and I think the stock does not have any large institutional or any HNI investors. So typically in these kind of companies, the liquidity is on the lower side. But if he has shares earlier, I would suggest he can hold on. He can wait for a mild correction, but typically, Shrishti, in such kind of companies, one has to understand that the entire investment value of such companies is always taken at a 25 to 30% discount when you value such companies. So I would believe that the longer term prospects are definitely fine, but in terms of the risk reward, the stock has already run up quite significantly. So I think he can hold on. Fresh buying can be done, maybe when the stock corrects and probably the stock is available at lower levels.
All right, the next one is coming from Shankar, writing to us from Tuticorin. He's holding Sun TV at a 35% profit, Kunal. Can he continue to hold on to this for the next 6 months, or should he look to book profits right now?
It's a good time to book profits for Sun TV. The stock is getting into a bit of a saturated zone around 700 mark. So I think 685, 690 approximately to 700 has been a zone of resistance for last 1.5 odd month, right from the November start for Sun TV. So I think it's a good time to try and take some chips off the table. Wait out for a correction. In case if it corrects and comes back to 640 odd mark, maybe slightly lower, that could be a point where you will look to consider buying again.
Okay, Kunal, once again coming to you, Saurav wants to have a medium-term outlook on Deepak Fertilizers as well as Puravankara Limited. He didn't share whether he has these names in his portfolio, but wants to know what's the outlook at the current point in time with a medium-term investment horizon.
See, both are interesting charts. In fact, Puravankara is, I think, on the verge of, or already, I think, has confirmed a 12-13 year breakout. So this could be a big breakout for the stock. But of course, I think the stock would be a very high beta. And given the market scenario, it could be better if you can have a slightly lower position size. So your position size matters over here. Deepak Fertilizer is also an interesting name. We've seen many of the fertilizer stocks looking very attractive, right from the likes of RCF, NFL, etc., which have done reasonably well. So which means Deepak Fertilizer would also get into a breakout. So hold on to that stock as well.
All right, coming to you, Avinash. This one is coming from Hema, writing to us from Chennai. She's among those lucky people who got the allotment of Tata Tech at IPO. 30 shares is what she got allocated when it comes to Tata Tech. Now she wants to know whether she should stay put with this for the next 2 to 3 years or book out profits that she's already making on this one.
Well, I think the better way would be to just buy and forget for the next 2 to 3 years, because typically, as everyone is aware, Tata companies never come to the market again. I mean, a classic example is TCS, which made its initial public offer in 17 years back, and after that there has been no dilution in terms of rights or preferential issues. So I think a lot of wealth can get created even from these. I think what is required is little more time and conviction. So if she doesn't require money as of now, I think it's better to hold on for the next 2 to 3 years. A very large and significant wealth creation journey could be possible, in the next, say, 2 to 3 years.
Okay, Avinash, once again coming to you, this query is on Yatharth Hospitals. Kathir is holding 300 shares for a price of 410 rupees. Can he hold this counter for the next 3 years as well?
Yeah, I think we've seen very strong numbers from Yatharth Hospitals, and I think hospitals are a very strong flavored segment in the market as of now. Our sense is that they operate in specialities, as well as they have a large kind of operating leverage available because the capacity has just recently expanded. So I would believe that the next, say, 2 years, I think if the investor can hold on, he could not only recover his cost, but he could definitely hope to make a decent risk reward. So would advise him to hold on as of now.
One is coming for you, Kunal. This one's coming from Satya. He's a long-term investor. He wants to know, is there any reason that you could see that he should actually book out profits in the 3 counters that he's holding currently? One is MCX, which he's actually bought at a price of 1,360. The other one is BSE. Buy price is 500. And NLC, the buy price is 92 rupees per share. So he's making profit. Great ones in all of these counters. But what should he do? Do you think it makes sense for him to exit?
I think you should ride the trend and continue to do that for at least another couple of years, if not more, for these stocks. There would be an odd phase of a correction where these stocks may get into that 30-40% correction also. So you have to be ready for those high volatile moves. The best way to offset is, in case if you are getting a bit jittery in terms of your investments and want to probably time it, then it's always best to try and book out maybe 50% of your profits, so that your initial cost price drops down significantly for these stocks, for the balance quantity which you hold on, and then continue to ride on to the stock on the long term uptrend. And in case if the stocks correct your selling price or from your price of exit of partial profit booking, then it's always a good time to try and buy back those stocks and try and take advantage of corrections.
Okay, so that's the take coming in on NCX. But with this fears, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET. Now let's continue taking your queries, and this one is a combo view that our viewer is requesting from Kunal as well as from Avinash, and he has this counter known as Agrawal Industrial Corp. I'm unsure if both of you will track this one, but he's been holding it since the level of 50 to 51 rupees per share. He bought this during COVID era, and he's saying he wanted to play the infra theme, so he thought he will do it via this proxy play. But he wants to know now, one from you, Avinash, is that how long do you actually see this infra cycle continuing? Because we've seen a great rally coming in the infra place. It has been at least 3 years now that we're actually seeing these counters actually perform well. So he wants to know, do you think that there is further scope of run up, and in that sort of scenario, Agrawal Industries makes sense for him to continue to stay put with? And on the technical front, Kunal, he wants to know, what will be an appropriate target for the stock, given the fact that the stock has actually seen a spectacular rally? So Avinash, you go first.
Has been one of our earlier, mid-cap picks, which we have recommended to our clients. In fact, this company is into shipping, logistics, as well as coal tar, which basically is a combination of infrastructure and other, ancillary services. The company has been doing extremely well, and in fact, we have seen very solid earnings growth for the last 2 to 3 years. Our sense is that even FY24 and FY25 should be a lot better, because considering the kind of growth in infrastructure, shipping services have also picked up. In fact, this is one company which has funded most of its growth largely from its internal accruals and very little dependence on debt. In fact, to tell you, very marquee investors like Ashish Kacholia also hold the stake here. So I would be, if the investor has a 12 to 18 month horizon, he should hang on. Maybe he could book out some profits and take out his initial capital. But the next 12 to 18 months should be equally strong, and we expect a target price of around 1,050, 1,100 over the next, say, 12 to 15 months.
1,050 is the target that Avinash is seeing for the next 15 to 18 months. Kunal, do you track Agrawal Industries by any chance? Your view?
No, I don't track the stock, and I think the stock is very low liquid or illiquid. In fact, even on a day like today, the average volume is just about some 6,000 odd shares for a stock priced at 900 plus rupees. So I would probably advise caution for the investor.
Okay, moving on to the next query then, and okay, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And Kunal, the first query is on Wipro. Sunny is holding the shares from a price of 426 rupees. Wants a short-term view on this one.
Hold on to the stock.
All right, Alok from Delhi has Indowind Energy, 12,000 shares which he purchased at 17.3 rupees per share. Kunal, not sure if you track this one, but should he stay put or look to exit right now?
Hold on as of now.
Kunal, one more for you. Guru wants to know, can he buy Campus right now?
Well, stock has been correcting very sharply by only about 325 mark, which is the 200 DMA.
All right, there is a viewer who's talking about Tata Tech. Avinash, you said buy and forget, but the point is he's making a loss and he cannot wait for 2 to 3 years. What should he do with Tata Tech currently?
Well, I think if he is a short-term trader, then I think he could exit, because in the very near term, the stock has moved up from 5 to around 12.70. So I think he should exit there.
Okay, Avinash, what's your view on Indoco Remedies? Vara Prasad is holding 217 shares from a price of 375 rupees. Hold, exit, or continue to add some more?
No, I think he can hold on. I think it's a mid-cap pharma company, but definitely has got good earnings growth kind of potential. So I think continue to hold for the next 12 to 18 months.
Kunal, Hudco as well as HCC, Anju is holding both of these counters. Hudco at the price of 83 odd rupees, HCC at a price of 28 odd rupees. Wants to know whether she should continue to stay put or exit with profits.
Stay put and add if possible.
Kunal, what's your view on GHCL? Subrata Mukherjee is holding 100 shares from a price of 579 rupees. Wants a short to medium term view.
I think if you get it closer to your cost price, 580 approximately, good time to exit.
All right, Avinash, this one is from Sahil from Bengaluru, and he's been very lucky with IPOs. He got an allotment in LIC as well as Honasa Consumer. He wants to know whether he should stay put with both of them for the long term or look to book profits in both of them right now.
I think he can hold on to both these stocks for the next at least 2 years. I think both these companies hold promise, but I think you'll have to give a time frame of at least 18 to 24 months.
Kunal, what's your view on RVNL? Venkatramani is holding the shares from a price of 38 rupees. Wants a 1 year view on this one.
Continue to hold. If in case there is a major correction towards 150, look to add for.
All right, with that we come to the end of the rapid fire as well as queries. Thank you so much Kunal as well as Avinash for patiently answering all of those queries. And viewers, if we've not been able to take your query today, don't be disheartened. We'll be back tomorrow, and hopefully you've benefited from all the queries that our experts have resolved for today. But for that, on that note, we will sign off on this edition of Buy Now Sell Now. Goodbye from Shrishti, myself, team that put the show together. Stay tuned. Markets at Noon is coming up next.